here.
I mean, I guess the question is, when is some of the liquidity going to come out? And for that, let's add Richard Fisher to the conversation, if we could. He's the former Dallas Fed president. Love having him on, too. Richard, you there? That's good to see you. I'm glad you were able to join today.
Yeah, I appreciate it. And being alongside of Rick is a great honor, by the way.
It's good.
It's hard to dispute what he says.
It's good to have you both. So do you think we've seen the magnitude of the move in rates? Is this about it for the 10-year, 161, 162?
Yeah, well, it depends on where you're looking on the curve. Obviously, the 2 to 5 year space basically has doubled in yield since August. However, these are still very low rates. And as Rick points out, there's a lot of liquidity floating around the system. And then I think also very importantly, companies are passing on the inflationary pressures that they're seeing on the cost side and the input side. And consumers are, seem to be taking it in at this juncture. That protects their margins. Look at what Procter just announced this morning. And this is very typical behavior. So far, I think that this has been well digested. I do worry that inflationary pressures are far from transitory. Again, if you read through Procter's statement, just as one example.
Of course.
It just shows you how long it takes for businesses to adjust and figure out how to reconfigure and re-up it as they did in their announcement.
Well,
so this is that kind of environment right now. But again, I think Rick makes a significant key point. The amount of liquidity coursing through the system. And, 10 years ago, that was when we had just finished up QE2. We added $600 billion to the Fed balance sheet. And then we went on another series in QE3. And then we didn't taper till 2013, actually January of 2014 after the taper tantrum. At the end, the balance sheet was $4.5 trillion. And as Rick points out, it'll be $9 trillion.
So is there too much? I mean, is there too much liquidity? Has the Fed already blown it, Richard? They should have already tapered, right?
Well, my views. I would have started tapering a little bit earlier, but I'm no longer there. Besides that, I lost a lot of votes when I dissented. So, but even Rick's point is key. Even if they taper down to the end next summer, as they hinted or announced, you're still going to have a pretty significant balance sheet, and they will not have likely raised rates until they get that process done. Although what's happened in the 2 to 5 year space is last couple of weeks is basically the equivalent of 3 interest rate increases by the Fed. And yet the market's digested it. So there you have it.
Well, because Rick Reeder, the last word to you. We've digested it because as you guys were just talking, even with the taper, you're still going to be doing QE2 plus of bond buying. And the market knows that more than anybody else.
Yeah, no, I think that's right. And like Richard said, you're pricing in, and part of why the Fed, I think, should have started tapering a bit earlier, is you need to open the window. And they've articulated they won't start raising rates until well after they finish this tapering program. You need to start getting there so that in case you need to create some breaking of this inflation trend, you could start to move rate higher. Markets have priced in, like Richard said, 2 hikes for 22, almost 2 hikes for 22, and then 3 into 23. So like he said, the system is starting to anticipate the Fed doing it. I actually question whether they are going to move that much, but I think they should start in 22. I definitely think they should start moving, and I think they need to open that window up. But listen, if you look historically where real rates are, and I think real rates are going to stay persistently lower than they've been over time. This doesn't say rates can't move a bit higher than they are today, but there's a series of structural dynamics, including demographics, including pension funds now being fully funded, that I think real rates will stay lower, even though you have a Fed that's reducing the amount that they're putting into the system.